This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and today is FOMC day and I'm going to do what I often do, which is just kind of point at this thing and say, I smell a rat and I'm not going to be paying any attention, and we'll use Camel's razor, aka tell that to the bond market to continue to accurately predict what the Fed is going to do, because remember, it is the bond market in aggregate that determines rates, not the Fed. So today I want to talk a little bit about the Fed and FOMC, just a few slides, not going to take very long. I'm just going to kind of point at the ship that is currently sinking, okay? And we're just going to take the mickey out of it, really. Then I want to talk about valuations, because I was trying to make a point, so I opened 1 or 2 tabs on valuations. I ended up going down a bit of a rabbit hole, so I wanted to share that with you. Then we're going to talk a little bit about Bitcoins, a little bit about Altseason and the dollar, and then we'll look at some charts and positions and all of that stuff. So let's get into today's episode, okay? First of all, once again, tell that to the bond market, right? Nobody cares what anyone's opinion is on this channel. Nobody cares what the Fed says. Nobody cares what any of the macro guys say, because tell that to the bond market, right? This here is the CME Fed Watch tool, and it is essentially just bond market futures. The bond market in aggregate sets rates. Right now, therefore, we can say with as much certainty as physically possible to have in markets that we're going to be seeing a 25 bips cut today. So we don't need to watch FOMC. We ain't got to waste our time live streaming it or anything like that, because 25 bips is almost certain. Now, nothing is ever certain in markets, but this is as certain gets. We know there's going to be some spiel from the Fed about the labour market deterioration. And once again, I smell a rat, okay? Because we first trended into labour market deterioration and continue to maintain a deteriorating trend for a good few years now, okay? Then just as the writing started to really present itself on the wall, getting into recessionary areas, we then started to see record downside revisions in the labour market, okay? And then on top of that, the government shuts itself down. And then on top of that, the government has this kind of issue where they lose access to the jobs data. And now it just so happens we've got even more layoffs. So feel free to pause your screen and take a good look at this. But I'm simply here to tell you the Fed is going to waffle about this. It's going to pretend like this is kind of okay or whatever. But at the same time, I'm going to continue to say, I don't believe what the Fed is trying to convince everyone else of. At the same time, we can also expect the Fed to give some spiel about how inflation is persistently sticky and they're concerned about another uptick in inflation. Meanwhile, on this channel, we continue to call BS on the Fed bluff, okay? We continue to say, if you swap shelter with ALNRI, which is a real-time metric, what you notice is we have been below target for a while now. So I continue to sit here and accuse the Fed of cooking the books. I'm going to continue to do that. And when we eventually roll into a recession, I think everyone else is going to start to point the finger and realize that they did this by design the entire time. Keeping in with this theme of smelling a rat, okay? There's also going to be no more inflation data released next month, at least not for now. But I'm sure this is innocent, right? I'm sure this is absolutely fine. I'm sure this is not a controlled demolition. And at the same time, I'm also sure that we're not in a bubble, right? At least according to Rao here. I think this is kind of ridiculous, and I will show you why. The idea is that this is bubble territory and everything in here is just a log straight line and doesn't matter and nothing is overvalued. But I make the case this is a log channel and we're right into the top of it. Now, what do market makers love to do with these long-term channels? They love to overthrow the top to trap a bunch of liquidity and then walk it back down. And by the way, we are over 62% away from the median line. Okay. Now, at the same time, here's a fun fact. If the S&P crashed by 50% tomorrow, it would still have a market cap around the level of the dot-com bubble in 2000. And this made me start to wonder, right, just how overvalued is this market? People are quick to say, well, the dollar was worth significantly more back then, right? But as Henrik points out, both market and GDP is measured in dollars, hence that factor has been taken out, right? We're still measuring it in the same denominator. And for some reason, I think because they showed up late to the market, people want to try to explain this away and say, well, no, this is early, right? This is going to continue for a long time. Again, I don't really believe it. And I think the cracks are starting to show in the system, as I kind of showed you earlier. I think we smell a rat. But by all means, okay, you can continue to eat the cheese. I don't know where I'm going with with these analogies, but I'm sure you get the point. Anyway, I searched what is the average PE of a stock in the S&P 500, right? And the 10-year average going back the last 10 years is 36.8, which is significantly above the 15 to 25, which is considered normal over the longer-term historical average for the S&P 500, okay? But to really put this in context, I wanted to start by using the most extreme example that I know of. PLTR is trading at a price-to-earnings ratio of somewhere between 591 and 628. Okay, do you realize how insane that is? What this means is at the current share price, investors are suggesting that we would need to maintain earnings for somewhere in the neighborhood of 591 to 628 years before we could see return to fair value on the current multiple. Okay, that's what we're saying here. And I know that we've picked the one stock in the stock market that is in a hyperwave, fine, okay? But then I started to wonder, can we, rather than pick an extreme, just look at some of the Mag 7 stocks, okay? Because the Mag 7, let's face it, is the market, right? They make up the majority of the move in the indexes. And so I pulled up Apple here, and it's trading at a PE ratio of 40. So, okay, fine. We're expecting some growth, I guess. But that's still 40 years at current revenue or current earnings before we can start to say, yeah, okay, everything is baked into the cake, right? That's what these ratios really are. So just think about that, 40. But to be honest, when I saw this, I was like, yeah, it's not like that bad, right? It's not PLTR bad. But that made me wonder, well, what do the rest of the Mag 7 look like? Here's Tesla. Look at the PE ratio. 308 years before we get to a reasonable valuation based on current earnings, right? Think about what I'm saying here. Nvidia, much more humble, down at 57, okay? But still pretty high, if we're being honest. Alphabet, again, pretty humble here at 29, but still pretty expensive. Meta also at 27. Amazon trading around 34. Microsoft up at 40, right? Do you see the pattern here? These are all really expensive. And in addition to being at the top of technical support, putting in a throw over, going vertical for the stock market, we also have those 4-year cycle lows due, right? And at the same time, the chants for the 4-year cycle is dead are louder than ever recently. Bob here says it's cope for the recent action. Sadly, 99% of them don't even know how it works or is applied. The cycle measures the time between bear market lows and nothing more. Where it tops in the cycle will change over cycles. That's just a different translation. And it's not all about topping at the same point in the cycle every cycle either. In future cycles, you will likely see just 18-month bull market phases within a cycle. And yes, the halving is totally irrelevant to the 4-year cycle, as is measuring it from low to high or high to high or any of the other ways these people measure them. But look, it's not just me that's saying this, right? I've been saying the same thing for a while. It has reached this kind of psyop level where suddenly we're trying to normalize a bunch of stuff that's really not normal, right? It's not normal to have valuations like this. It's not normal to go parabolic the way we've been going. And it's not normal to have a bunch of people come out right at the last minute and say, there's no more 4-year cycles without even taking the time to study the rules, right? It's just a very weird situation. All at the time, remember, when we're about to get rate cuts based on labour market data that has gone missing. As we're seeing job market cuts at levels not seen since the GFC in many cases, all the while with a sticky inflation narrative, which again is another psyop here, because inflation is under control and the Fed is actually far behind the inflation curve. But don't worry, we're not going to confirm this later on in the month. No, we're just going to remove the inflation data altogether, right? Like, I don't know how sheltered your life has to have been for you to look at all this and go, yeah, this is fine. I trust these guys. They're looking out for my best interest. Like, have you never experienced nastiness in the world? Or is it just pure delusion and cope because most people didn't make any money in this cycle yet? I don't know what it is. I really don't know. I'm scratching my head every single day. But I do know this. We're getting closer and closer to those 4-year cycles. And even if we overrun my expectations to the upside by a bit, right, the chickens are going to come home to roost because that's what cycles do. Meanwhile, they're also telling you that they're getting ready to exit with the Camel Crew here, right? Because not only are they thinking about banning Congress from owning stocks, they're now going to talk about banning the president, his family, and elected officials from owning Bitcoin or creating cryptocurrencies. So they probably are going to pump this thing up one final time and then let themselves out at the top and then ban themselves from ever going near them again. All the while framing it as if they're doing the public a service here. But really, they're just going to be letting themselves out at the top again. So even if you don't believe me, right, look at what they're doing. Do you really think they're just going to bow out here and leave money on the table? Or do you think what they're going to do is pump this thing up and use everyone else as exit liquidity? And instead of have everyone point the finger at them, they'll just say, no, this is for you guys, right? You guys deserve this. We don't deserve to just make all this free money off the backs of everyone else. Again, I make the case. They are telling you what they're going to do before they do it. At the same time, we got France talking about potentially accumulating 2% of Bitcoin's entire supply to establish a Bitcoin strategic reserve. Now, will this actually happen or not? I don't know. But so long as the market believes it's going to happen, that should start to fuel the upside rally that I've been calling for into the end of the year. And similarly for the altcoiners out there, okay, it really is like now or never, okay, because the Altseason index is now even lower than it was after the FTX crash. This is either a generational opportunity or you're totally cooked, right? There's probably nothing in between. And I will come back to my 2 altcoin scenarios here where I can see alt season occurring and how I can see it occurring in just a moment. But just before we do, I wanted to point at this, okay? Really nice chart from Tony here, because deflation is coming. You see a lot of people, again, on top of all the other psyops we've been talking about today, talking about how the dollar is dead. And sure, in the last 12 months or so, it has moved down significantly. But over the long term, since about 2008, it just keeps making higher highs and higher lows. And so far, this is another higher low. At the same time, as Tony points out here, this is the first ever golden cross on the quarterly for the Dixie. What does that tell us? It tells us a big dollar rally and a big dollar bid is soon around the corner. And that, of course, would be synonymous with deflation should it show up. Now, if I pull up my own Dixie chart, okay, I'll turn my indicator off here because we don't need that for this purpose. And by the way, we're running that discount code on Friday, so make sure you tune in for that if you're interested. Legacy support goes all the way back, multiple 3-year cycle lows, okay? And now we're setting up what I am claiming will be a false breakdown into an inversion for the 3-year cycle, and then it's full board deflationary rally, okay? Which again fits with this idea, doesn't it, that Tony has just shown. And that only makes sense given how far behind the inflationary curve the Fed is. Now, as promised, I am going to talk about Bitcoin, and I'm going to talk about where I could potentially see alt season coming. Let's kick things off with Bitcoin, okay? We've been really saying there's only 2 scenarios here. Scenario 1 is, I believe we're going to left translate this weekly cycle at new all-time highs and then roll over and have a weekly cycle and then another weekly cycle to give us the 4-year cycle. My alternative path, which I'm not really cheering on, but we have to be aware of, is that we essentially do this first, roll over, okay, still going to left translate, and then the rest of the squiggle will play out from here. So in both scenarios, I'm saying that we've either bottomed or we're about to bottom any day now, and then we're going to move up to the left translation, which just means, remember, a top before the halfway point of the weekly cycle. Okay, so here's the blue arrow, that's the weekly cycle. Halfway between the two, we draw a line. If it tops to the left of that, it's left translated, right? And if it tops to the right, we call it right translated. That's all it means, nothing more. It's just an observation of where the top comes relative to the halfway point in the cycle. But in either case, because we've only got 2 weekly cycle lows now until we get to that 4-year cycle low, it's only reasonable to expect this to left translate and then start to, again, left translate and fail to head down for that 4-year cycle low. So the real question for me is, does that left translation occur at new highs or at a lackluster rollover like this, okay? In which case, this whole thing would just be like a distribution, wouldn't it? Now, on a balance probabilities, I say it's the yellow one. And if so, then alt season should probably come somewhere around here, okay? That's where I'd expect your alts to perform if there's going to be an alt season. Now, my call is unchanged. I'm still calling for no broad-based alt season. I'm still calling for only a handful as defined by 20 or less outperforming Bitcoin for this 4-year cycle. But if we are going to get some of these alts ripping higher, that's where I'd expect to see it happen. If we end up getting this lackluster rollover here, something like this, and the distribution type top for Bitcoin, then I would expect alt season, again, if it's to occur, to pretty much happen right here, right now. This is what I would expect, somewhere in this window for alts to rip. Now, again, I'm not calling for broad-based alt season. I still don't think really most of them are going to do that well. I'm just saying those are the 2 scenarios in which I could see alts actually mooning if they're going to moon. So we've really reached a now or never point for altcoins. Bitcoin, I do believe the read is very clear, like I said, one or the other. And I'm still cheering on the all-time high move just because of the price action we're seeing in these crypto stocks. They're doing extremely well at the moment, so I expect that to continue. The stock market is also doing extremely well, isn't it? It's probably a little extended short-term, probably needs to come back and correct for a half-cycle low in the next couple of weeks. Of course, it's FOMC today, so chop games volatility is expected for a couple of days. There's also a gap right down here, which may or may not need to be backfilled, but I don't really care about that, to be honest. We'll just let this thing kind of play out over the next few days. Just keep an eye out for that half-cycle low, which would be due sometime around, let's say, the 3rd of November to about 12th of November. And gold, to me, looks like it is working on a cycle low in here. That's what it looks like to me. So we'll see if we can get that. I'm actually tempted to add here, and I'm going to talk to Level 3 members about this today in the members section, because to me, it kind of feels like I really don't want to go long here, right? That's my feeling. My feeling is I don't want to long this at all. And when I do the introspective reflection, that tells me I should probably push the buy button until my fingers bleed here, right? Like if I don't want to take the trade, not because of technical reasons, by the way, because what we've actually got here is pretty obvious, right? We had this final angle, we came down, faked a breakdown into it, quickly have recovered, and we made a repair, and the camel indicator will soon select this low any day now. I suspect there's going to be a Brexit cross any day now as well. So technically, this setup is sound to have a long trade, something like this. Okay, I don't see why I couldn't have this, really, from a technical perspective. Internally, I really don't want to take this trade, which makes me think, like I said, we got to actually push the buy button here. So anyway, if you're a level 3 member, I'll make you guys a video talking about that in a moment. And then I think worst case scenario about this trade as well is if we get something like this and it rolls over, then we'll still be able to get out higher up than we are now, even with a failed trade and no further highs. So anyway, that's how I'm looking at it at the moment. So trade safe. I hope you're doing well. Let me know what you think, right? Is all of this fine? Am I overreacting? Is the tinfoil hat on too tight? Or are they really out to get us? I'm your boy Camel. Until next time, all the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel